the local church treasurer's handbook. It's only 2 pages, pages 10 and 11 in your PDF. However, all this is the cover and the table of contents. If I gave you the entire thing, it would be 75 pages. What I'm going to do is go through and talk a little bit about the table of contents in each section. If you want the local church treasurer's handbook, contact me. Most of it came from resources that are available on the website of the United Methodist Church's General Council on Finance and Administration, gcfa.org. They have a lot of resources available, so I encourage you to check that out. This would answer a lot of the questions that you may have. And then I'm going to refer you to one other resource, Church and Clergy Tax Guide. This is by a guy named Richard Hammer, who is like the guru of taxes. Any question that ever comes up, like, can I designate money for my child to go to camp and count it as a charitable contribution? Do I have to fill out a W-2 for this person? When should I use a 1099 versus a W-2? If contributions come in on January 1st, do they get counted in last year? And it's not something you probably need to update every year. You can see the latest I have is 2016. It's about time for me to get a new one. So the first chapter is all of the updates that they put into the current version, and the rest of the chapters are pretty much the same year to year. So between that and GCFA and this local church treasurer's handbook, it's more than anybody would ever want. Let's pull out page 11 and talk about some of the issues that it deals with. Housing allowance. There's a section, questions and answers on that. I mentioned it a little bit earlier, but clergy are unique from a tax standpoint. For income tax purposes, they are employees. For Social Security and Medicare purposes, they are self-employed. So each clergy person receives in their compensation package a cash salary, and they receive housing, either in the form of a parsonage, which in our conference, I would guess maybe 15-20% at most of our churches provide a parsonage that they own for the clergy person to live in free, or they receive some additional compensation not subject to income tax as a housing allowance. It's to be determined by the clergy person and the SPRC for the local church in consultation with the district superintendent to develop a reasonable housing allowance. What is reasonable depends on where you live. I can give you some guidelines that across the conference, the housing allowances range from pretty broadly about $5,000 on the low end to about $45,000 on the high end. The average is about $21,500, which is a little bit less than $2,000 a month. It includes all the expenses related to housing that a clergy person might have, mortgage or rent payment. It also includes all the utilities, and it includes furnishings. So it's pretty broad. So what you need to do as a church is designate a certain amount, if you don't have a parsonage, as a housing allowance for your clergy person. You need to do that before the start of the new year. In most cases, this is effectively done through the clergy compensation sheet that's approved at your annual charge conferences, because that's signed off by everybody, and it says for next year, we're designating this portion. Because the clergy person, when they file their taxes, in order to justify not counting that compensation as taxable income in box 1 on your W-2, they can only include as the housing allowance the lesser of 3 things. One is whatever this church has made a resolution in advance saying that their housing allowance is, or 2, what they actually spend, again, broadly defined, rent or mortgage, utilities, furnishings. And the third one is a fair rental value concept of a house with utilities and furnishings. So I get questions, how do you come up with that? You can go to like a realtor.com or a Zillow.com, put in the address that they're living, or if it's an apartment, you know, what the apartments are renting for there. Add in utilities and an amount for renting, furnishing. So they can only exclude from income the lesser of those 3 amounts. It is up to the clergy person to document that. It is not up to the church. Your only responsibility is to designate that housing allowance. But understand that that housing allowance is not subject to income tax. It is, however, subject to self-employment tax. We mentioned earlier that the clergy get a good deal here. They don't have to pay income taxes on part of their compensation. On the other hand, they do have to pay self-employment tax on the cash salary and the housing allowance, and that means they're paying what is effectively the employers' and employees' share of Social Security and Medicare taxes. We said earlier that you and I, as a lay employee, have 7.65% of our salary deducted from us, and our employer pays the other 7.65%. As a self-employed person for Social Security and Medicare tax purposes, a clergy person gets the blessing of paying that entire 15.3%, both effectively the employer and employee's share. So on one hand, they get the benefit of not having to pay income taxes on the housing allowance. On the other hand, they have to pay twice the level of self-employment taxes that we would. This has been challenged vigorously in the courts by a group called Freedom from Religion Foundation, and it's been upheld. So for right now, we're pretty solid on getting to exclude the housing allowance. Those churches out there that are providing parsonages need to provide information to the pastor on what they spent on that parsonage. That pastor needs to pay self-employment tax not only on their cash salary, but on the value of that parsonage. So, for example, I have to do that for our bishop because we provide an Episcopal residence. So each year I send to his or her accountant what we spent on our parsonage. There's a lot of other Q&As. Those are some of the things, just to whet your appetite for this exciting topic. The next one mentioned in the table of contents are accountable reimbursement plans. And there's a lot of questions and answers, sample policy, some sample voucher. But basically the thought behind those is that, again, on your clergy compensation form, you're going to have an amount for business mileage or books or all that sort of stuff provided for the clergy person. If you are reimbursing them based on receipts that they turn into you or mileage forms that they turn into you, that's not taxable income. It's paid through accounts payable, not through payroll. If, on the other hand, you put $2,400 on that clergy comp form for this and you pay it out to them $200 a month and you don't ask them to turn in receipts, it's taxable income to them and it needs to be included in box 1 on the W-2. It's much better, as you can see, for the church and for the clergy person if they have to turn in the receipts. That's what they're saying. They're doing the accounting for you, so they have to be accountable for it, and it's a reimbursement, not a compensation. And there are some sample policies in there about what is okay to include and what's not okay to include, and in some forms, but I wouldn't get too hung up on the form, whatever you typically require for reimbursement. Make sure you do it through accounts payable and not payroll, and you'll save yourself lots of problems. One of those reimbursements we mentioned was mileage. For reimbursement purposes, you can reimburse at the IRS mileage rate for employees, which they change every year and announce usually in mid to late December. For 2019, it's 58 cents a mile. That's obviously higher than the cost of gas, even for the worst MPG truck in the world. But it includes all the wear and tear on your vehicle, and that's how they come up with that figure. It'll change year to year. If you do reimburse any volunteers, the IRS allowed rate is 14 cents a mile, and that's hard-coded basically in the tax code and can't be changed without an act of Congress. You can pay more than 14 cents a mile for volunteers, and we at the conference actually do. Many people contribute their mileage and don't ask for reimbursement. If they do that, they can deduct as a charitable contribution their miles at 14 cents a mile. But if they're reimbursed and we do it at 22 cents a mile, theoretically that extra 8 cents would be subject to us sending them a Form 1099 at the end of the year. However, we don't have to do that if it's under $600. Most churches, I think, do not reimburse volunteers, but you could. And if you do, you may want to do it at the 14 cents. There's a section on moving expenses. Our conference policy is that if we have a change in appointment in a clergy person at a church, the conference coordinates the move and pays the bill, and then we ask the church to pay 25% of that, whereas the conference pays 75% of that. That's the basic rule. Starting in 2018, moving expenses were no longer deductible by anybody relocating to change jobs. So if you did pay a move on behalf of a clergy person or anybody moving, that became taxable income to them starting last year. So one of the things we, as a Conference Council on Finance Administration, agreed to do was, at least for 2018 and 2019, we are providing a 35% markup on top of that to give to the clergy person to help contribute towards their taxes. We're not saying that's exactly what their tax will be. The average move is probably $5,000 to $6,000. If it was a $10,000 move, we would give them $3,500 on top of that, and then give them a 1099 at the end of the year for the $10,000 plus the $3,500. Now, you as the local church don't have to worry about that, but understand that the clergy person is going to have to then pay taxes on that $13,500, and hopefully that $3,500 contributes to it. All you need to know is that as a local church, if you have a change in appointment, you're going to have to pay the 25% share of the move cost. So if it's a $5,000 or $6,000, we're talking $1,200 to $1,500 as an amount you might plan on budgeting for that. Pastor's discretionary fund is something that comes up fairly often. Generally, you want to develop some written policies, and it does give you some samples in this booklet and from GCFA's website on what type of things that can be used for, but you probably want to lay that out. The nature of a discretionary fund is that the pastor can use his or her discretion to help out somebody in need, but you need to say, can it be used for anything? Does it have to be for a member of the congregation or the community? Does it have to be just for like utilities or food? Can the person receive no more than 1 or 2 or 3 gifts per year? The limits on the gifts no more than $500 per time or $1,000 per time. If you set those guidelines in place, then the pastor has the discretion to give without saying it's Randy that the pastor gave to, so everybody knows that I'm hurting and embarrassed and that sort of stuff. That's the nature of a discretionary fund, is to keep that somewhat secret. But the pastor does have a responsibility to stay within the guidelines and to report on that discretionary fund. We have $10,000 in it. This month we spent $1,500. Here's the check number and here's what it was for. It doesn't have to say who it goes to, that sort of stuff, but we do need to report in summary. It's obviously not for the pastor to use for his or her own benefit, or I need a new computer, that sort of stuff. It has to be within the guidelines that you establish, and generally it's for people in need, defined as whoever people you're willing to help. If a church doesn't have the policies set up, then it really makes it tougher on the clergy person because they have to use their own discretion. They're already doing that to some extent because I'm sure they get lots of requests. You're probably going to, if you don't have them set up, have to live with whatever the pastor discretionarily decided. And then all you can ask for is some reporting, not by who it was paid out to, but how many checks were paid and what they were for. It's not a legal requirement to have policies developed, but it's again one of those best practices. It helps everybody understand. It helps the pastor know what he or she can and can't do, and it prevents anybody from backseat driving and saying, you shouldn't have used it for that purpose. That's kind of the nature of discretion. Once the guidelines are developed, you don't have a right to sit there and criticize them for saying they should or shouldn't have used it, as long as they're within it. So it's more of a protection for everybody. The next section talks a little bit about the reporting requirements that we've gone through quite a bit, the 941s for filing the quarterly payroll tax returns. Again, not required if your only employee is a pastor who isn't having anything withheld. It provides an example for filling out W-2s for the clergy person. If they aren't having anything withheld, you may only have in box 1 their cash salary. The other thing we'll get lots of questions on is many of your pastors and perhaps your lay employees might be having amounts withheld from their taxes or from their compensation, from their paychecks, on a pre-tax basis. Examples might be personal contributions to pension plan. For clergy, we've had a big push to try to get them to personally contribute and improve their readiness for retirement down the road to United Methodist's personal investment plan, or UMPIP, and you can do it on an after-tax basis, but I can tell you 99% choose to contribute on a pre-tax basis. If they're earning a cash salary of $40,000 a year and contributing $1,000 of that over the course of the year into UMPIP on a pre-tax basis, their taxable compensation in box 1 would be the $39,000. Other deductions you might have from box 1 are things like if they have a flexible spending account for medical reimbursements. There's a big push within the denomination to consider doing that. If they are doing that, then you should be withholding from the clergy person's pay each time, and that goes into a reimbursement account through WestPath, through their vendor, for the person to use for medical expenses. Many of us utilize that. It's your money because you've had it withheld from your paycheck, but you've had it withheld on a pre-tax basis. So you're using pre-tax dollars to pay for medical expenses rather than after-tax dollars. So you're saving that tax impact. So that's the reason for doing it. And there are limits. I think it's $2,600, $2,700 a year that they can do. But if they have that, then you need to report that correctly on the W-2s, and it has examples of that. If they are having anything withheld on a pre-tax basis, you as a church, when you're doing their payroll, are taking that out of their pay and you're holding on to those funds, and you're using the funds to pay the bill that you will get from either WestPath for UMPIP or the conference, which is part of the health insurance bill that you'll get for if they have a flexible spending account for medical or medical reimbursement accounts. Not only are you reporting it that way in the W-2s, but you're accounting for it that way and using their dollars that you withheld to pay the bills, so it doesn't end up being an expense of the church. Other tax reporting requirements that they talk about and have examples are when you send in the year-end W-2s for the pastor and any other church employees, it's transmitted annually through a W-3, and it gives an example of that. If you have any 1099s for independent contractors that you paid $600 or more over the year, that's transmitted annually as a form through a Form 1096, and it has examples of that. So another section on unrelated business income tax. Most churches do not have to file a Form 990 because we're exempt. If you have some unrelated business income, you might have to file a Form 990-T. And what unrelated business income is, if you generated income unrelated to your tax-exempt purpose that you exist. So for a church, it would be being a church. All the contributions you get in are related to that, so you don't have to worry about that. But if you're generating income from, you have a big bookstore and you sell books, they don't want to give a church an unfair advantage over a regular business trying to do that has to pay taxes on it. It doesn't jeopardize your tax-exempt status, but you may have to pay an unrelated business income tax. Most common examples for churches would be, and some churches have some significant rental income. First, UMC of Tempe has a lot, they're right on ASU's campus, so they get a lot of rental income from that. You could, if you're leasing out your part of your property to a preschool or a daycare or a charter school that's not yours, not reported under your tax identification number, it's just rental income, it could come in there. Cell tower leases are a big one. If you don't have a mortgage, rental income is not subject to unrelated business income tax. If you do have a mortgage, it is. Basically, the thinking is they don't want you to mortgage your property at a low interest rate to generate other income and have an unfair advantage over a non-church business. You only have to worry about rental income if you have a mortgage. If you do and you're not leasing a significant portion of your property, even if you have a mortgage, you can still maybe not file a Form 990-T if that rental income is insignificant. IRS says if you're leasing less than 15% of your property, your income from rental income is less than 15%, and then you're okay. That's if you're leasing land. One of the big gray areas that IRS has talked about is leasing of cell towers, which more and more churches have, because they can usually go up in a tower. They can be kind of unobtrusive. It's a good source of income. There's usually a lot of land. Cell towers like them because the churches are pretty well located. So the question comes down, let's say you don't have a mortgage. Leasing of your land is not subject to unrelated business income tax, so there shouldn't be a problem. Well, if you're leasing personal property, that isn't excluded. So you would have to. So the question is, when you're providing a cell tower lease, are you providing a lease of the land or are you providing a lease of the cell tower? And so it probably comes down to who owns the cell tower. If Verizon owns the cell tower and they're just leasing the land to put the tower on, then you're probably okay saying that's rental income and it's not subject to unrelated business income. If you're building the whole tower or you paid for the whole thing and you own that tower and the land underneath it, then you're leasing the whole thing to them, and IRS has said a cell tower is personal property, it's not real property. So the rental on that tower is subject to unrelated business income tax. So that would be probably the most common thing where a church might have to file a 990T. Again, it does not jeopardize your tax exempt status. It just means you might have to pay some income tax on that portion of the income. The next section within this Local Church Treasurer's Handbook deals with the income tax status. The entire United Methodist Church is tax exempt under one group ruling from IRS that says the United Methodist Church denomination is exempt from taxes. You may have heard 501c3. That's just the tax code that relates to tax exempt entities. So it says we're exempt under the tax code 501c3. And by the way, IRS says we're going to let GCFA police who is included and not included in this group ruling. If you're a church or a conference, it's a slam dunk. But you need to provide documentation occasionally that you are tax exempt. Well, the way you do that is you get a copy of the group ruling for IRS, which, by the way, if you need it, I have it in an electronic form. And you get from GCFA a letter that says, Dear First Church of Anytown, Arizona, you are covered by this group ruling. You take those two things together and you never have a problem. But if you're trying to prove you're tax exempt from some group to get some break on pricing or something, and they're looking online for a guide star or something, they're not going to find your church's tax identification number listed on that list of tax exempt numbers, because it's only one number, and that's GCFA's number. So you're probably going to have to jump through a little more hoops to do that. But if you go to gcfa.org and do a search on a tax exempt group ruling, it'll come up with that link. It's a one-page, very quick form that you fill online to ask for a letter back, which they will get back to you within a day saying that you're covered. Some of the other entities, maybe, maybe not. If you have another ministry that's broken off separately, it may not be covered. If you have like a food bank or something that you're operating at a church, it's not necessarily a ministry of the church, but you've created a separate legal entity, it may not be covered. Other examples across the country might be hospitals that are affiliated with a church or universities or something like that. But the only way to ask is to do that ruling request from GCFA. There's information on other taxes. As we said, we're 501c3, tax exempt, your church is. You don't have to pay income taxes on the income you generate, and you don't have to file an income tax return, which is all great. But there are some other taxes that we may or may not be subject to. Sales taxes is a frequent question, and that is a state-by-state proposition. So, for example, in Nevada, any church can get a tax-exempt certificate. In fact, we have it for the conference, and they issue it for 3 or 5 years. I can't remember which. And it covers like our camp that we own and operate in Nevada. But Arizona churches are not exempt from paying sales tax. So it just differs state by state. So if you're in Arizona and you go to Home Depot and you guys are buying some paint to repaint the Sunday school rooms, you're going to have to pay the tax on it. You would think we're tax exempt, but again, we're exempt from income tax, not sales tax in Arizona. Property taxes. This is not a state by state, but instead is a county by county decision. Some of the counties, at least within Arizona, are getting more and more aggressive on asking a church to prove that they're still operating for the tax-exempt status, including their entire property. You may be operating most of your property, but say you own another piece of land that you're not using for the church, and you're trying to sell it. If they find out about that, then that really is subject to property taxes because you're not using it for your tax-exempt purpose. You're going to use it to generate some money, or part of it. In fact, we just went through an audit here at the conference this past year, and when they came in and said we were okay for most of it, but we lease some of our space here at the conference center to the United Methodist Federal Credit Union. And that rental income, they said, was not related to our tax-exempt status. Now, it's a business, it's a financial institution, so we had to pay this year for the first time a little bit of property taxes. And I've heard more and more stories of local churches, even if they do eventually get it reapproved, asking for documentation from the county assessor to evaluate that. So they must have decided that churches are a good source of potential additional revenue. Keep in mind that you generally are exempt from property taxes, but you probably have to prove it. And if you have any part of your property you're not using for your tax-exempt status, you may have to pay property taxes on that. One other thing that this talks about is unemployment taxes or unemployment insurance. Churches are exempt nationally and in all the states from paying unemployment taxes that most regular businesses do. What that means is if you as a church have to let an employee go, that they don't have any unemployment benefits available to them. But at least we don't have to pay it and you don't have to file those forms. There's also information, we talked a little bit about employees versus independent contractors. It's often a gray area. Typically you might see for independent contractors, custodians, very part-time musicians, helping out the choir here and there, perhaps an outside accountant. It's generally a matter of control, and if that person is doing similar stuff for other businesses or other churches, then they're probably an independent contractor. If you say, I'm providing you office space, I'm providing you a computer, and you have to be here 9 to 3 days a week, even though it might be part-time, you're controlling their schedule. It looks like you're more of an employer and you probably are a W-2. But it's a gray area. There's like a 20-factor test, and some of that information that you may want to think about is included in there. So take a look at those contents, and if you really want a lot of the depth, it's in this Church and Clergy Tax Guide.